I'm Maureen, broker owner of Sell Your Home Charlotte here in beautiful Charlotte, North Carolina. And today we're going to delve deeper into financing options for new construction. So in this video, we'll discuss the differences between construction to permanent loans and a builder's preferred lender, which they can offer any type of FHA, conventional, or VA, whatever. So let's dive in. So understanding construction to permanent loans. So you're going to use these types of loans if you own the land already and you're having somebody build a house on the land. So you bought the land already, and you have a builder, you have an architect, and you want to build. So most builders are not going to upfront the cost of building. So you're going to have to get a construction to perm loan, which will give you different levels of checks made out to the builder at different levels of the building process. The benefit of this is that you can have one application and one closing process, and it's simplified. However, these loans require large down payments and have stricter qualification requirements than traditional mortgages. So you just have to understand that going up front, it's going to cost you a lot more money up front, to put in a down payment, and you just have to have the cash on hand. Now, the other thing is if you're buying in a neighborhood. So let's say you're buying in a new HOA and this builder's in there. They're going to have what they call preferred lenders most times to work with. So these lenders are familiar with the builder's process, and they can often offer incentives to the buyer, such as credits or closing cost upgrades and upgrades. So while these incentives can be kind of attractive, it's important to understand you're not obligated to use the builder's lender. You can go shop for your own lender, and sometimes you'll find that the closing costs are not worth it because the interest rate might be lower, or your lender might have a lower closing cost overall. But you could also choose your own lender and still try and negotiate the perks that the builder's offering. Typically, they'll do that if you were declined by the builder's lender. So if you, for some reason, your debt to income's high or your credit score is not as high, and you get declined, they might still give you money, closing costs and incentives if you use your own lender, which has a little bit of a, looser underwriting. So remember, everything in real estate is negotiable. So don't be afraid to advocate for yourself and ask for what you want. If you don't get it the first time, somebody else can probably do it. And it's really important to work with a buyer agent that knows that and knows a bunch of different lenders that have different products, because there's something for everyone. So that's a wrap on understanding financing options for new construction. It's not really rocket science. It's the same as regular, but remember, everything's personal situations, personal needs. Talk to your financial advisor. Get a knowledgeable real estate agent who understands different mortgage options. Talk to a mortgage broker. The more people you talk to, the better. So if you're considering buying new construction in Charlotte, North Carolina, don't hesitate to reach out. I'm Maureen, and I'm here to help you navigate the home buying process. And I am the broker owner of Sell Your Home Charlotte, and nobody sells Charlotte like we do.